PantheonAI presents Tesla Robotaxis, Amazon Satellite War, AMD's AI Surge, and Trump Media Buyback. Good morning, everyone. Welcome to the PAI Morning Briefing. I'm John, and it is June 23rd, 2025. Sarah, glad to have you with me today.
Absolutely, John. Always a pleasure. And good morning to all our listeners out there. We've got a packed show for you today, navigating through the latest market insights, news breakthroughs, and, of course, some crucial sector analyses that are really shaping our global financial landscape. Grab that coffee, settle in, and let's just dive right into it.
Couldn't agree more. Let's kick things off with a quick market overview from overnight. We saw the major indexes showing a real mix, almost static in some cases with just slight shifts. The S&P 500, for instance, is trading right around 6,969. I mean, it's a modest change, barely moving the needle with a negligible dip of about 0.009%.
Right, barely a blip on the radar there. And the Dow Jones, not far behind, closed at roughly 42,155, also dragging along with a slight decrease. But then you look at the Nasdaq, which, true to form, is always that resilient tech barometer, and it nudged up by around 0.11%, settling at roughly 19,449. So, a bit of a mixed bag, wouldn't you say?
Definitely. And the Russell 2000, our small cap indicator, is actually inching forward with a slight gain, coming in at about 2,106 with a fractional improvement. So, like you said, mixed. Now, what about our cryptocurrencies? Always an interesting space.
Oh, absolutely. Bitcoin is sitting just a hair under its 100,455 mark, specifically trading around 100,455, though it's feeling a bit of weight from a fall of close to 0.5%. Ethereum, on the other hand, remains in the 2,200 vicinity with a similar dip of about 0.5%. So despite a few swings, nothing too dramatic this morning, but these small movements, honestly, they just remind us that markets are rarely about dramatic changes, right? It's more about the gradual shifts coming together over time.
That's a great point, Sarah. It's that slow burn, isn't it? Taking a step back and looking at the broader picture, the market's really been riding this delicate balance lately where tech and traditional industries are expanding in somewhat unpredictable ways. Investors usually look for the kind of spectacle that sparks headlines, but some sectors, technology in particular, are just demonstrating this gradual yet really meaningful growth.
Yeah, and technology stocks, after all, are fueling not only our gadgets, but really our future financial systems. And you can see this clearly reflected in the Nasdaq's modest uptick. It just exemplifies that despite occasional volatility, innovation continues to be a reliable engine for long-term growth. It's not always about the flashy headlines, is it?
No, it's not. And in the realm of equities, while major indexes offer a snapshot, when you dissect this balance further, you see traditional industries like energy and finance are now really intertwined with emergent dynamics in tech and renewables. Case in point, Tesla. Investors have been eyeing the developments from the electric vehicle sector, and Tesla's always been a perennial favorite.
Oh, absolutely. And they just unveiled a novel initiative in Austin, Texas, their long-awaited and eagerly anticipated Robotaxi service. Elon Musk, never one to shy away from bold moves, outlined a new revenue model allowing Tesla owners to generate income by transforming their vehicles into Robotaxis. And it wasn't long before Tesla's stock just shot upward, reflecting investor optimism about future earnings and innovations. I mean, while that might sound like something right out of a sci-fi novel, it really underscores that the future of transportation is arriving faster than many expected, and it's starting to generate tangible market momentum.
It's wild, isn't it? Speaking of bold leaps, on the space front, Amazon is taking its own. They're launching the second batch of Kuiper Internet satellites. This isn't just another routine space launch. It's a strategic move aimed squarely at competing with Elon Musk's Starlink. Amazon's ambition to deploy a satellite constellation that rivals SpaceX is something that could potentially reshape internet connectivity on a global level.
And isn't it interesting that in today's world, the battle for internet supremacy extends beyond Earth's atmosphere? I mean, for those who thought digital wars were confined to the virtual realm, this is proof that the final frontier is now very much a part of the marketplace. It's fascinating.
It really is. Now, turning to the bond market, we saw that yields on the U.S. 10-year Treasury have dipped to their lowest levels in about 6 weeks. Getting into the specifics, the yield recently dropped below the lows seen in June, attributed not only to the usual flight to safety on concerns about global events, but also due to a dovish recalibration by the Federal Reserve following discussions among officials like Waller and Bowman.
That shift suggests that investors are seeing a semblance of hope in monetary policy stability, which could have far-reaching implications for both equities and fixed-income securities. In effect, this grounding moment in bond yields reflects a market that's hedging its bets amid global political uncertainties and economic realignments. It's a subtle but significant signal.
Exactly. Meanwhile, in corporate maneuvers that have certainly turned some investors' heads, Trump Media's stock, identified by its ticker DJT, enjoyed a boost. Largely fueled, it seems, by a planned buyback program. At the center of this news is a $400 million stock repurchase plan that could slash the outstanding shares by around 10%, hinting at potential value enhancement for shareholders.
It's a reminder that sometimes those below-the-surface corporate strategies can have ripple effects across the broader market, especially when combined with the broader consumer sentiment and political overtones that always seem to accompany matters tied to Donald Trump's brand. It's never just about the numbers there.
No, it's not. Speaking of corporate maneuvers, oil is another volatile yet fascinating sector. Recent reports detail that 20 oil stocks that have passed a stringent quality screen are gaining attention from investors who are still uncertain about potential disruptions stemming from geopolitical events, particularly with Iran. The international oil market continues to navigate a maze of supply concerns and geopolitical tensions, which means these stocks, screened based on robust metrics like debt levels and cash flow, might offer a more secure investment avenue amid an often rocky global landscape.
That's smart, really. Looking for quality in such a turbulent sector. And then we have AMD, a key player in the semiconductor and AI chip industry. Analysts are really piling on with optimistic forecasts, suggesting there's more upside for AMD as demand grows for advanced chips, vital for powering artificial intelligence models. Melius analysts, in particular, see a robust pipeline where future AI chip sales could propel AMD's stock even higher over the coming years, attracting not just hyperscalers but also sovereign customers excited about innovation. It's an impressive synergy of cutting-edge technology and market foresight, offering investors a glimpse of how AI might reshape semiconductor economics in the near future.
AI is just everywhere, isn't it? And in a surprising twist in the fintech arena, Fiserv is making headlines by partnering up with Circle and joining the stablecoin party. This collaboration has fostered optimism among investors, with analysts issuing an assertive price target for Coinbase's stock. Fiserv stock has surged in response to this rollout of stablecoin products, signaling that traditional financial systems are increasingly integrating digital asset technologies.
It's intriguing, isn't it? How an established name in finance can leverage digital trends and innovation, turning potential disruption into opportunity. You know, not every stock narrative has been a celebratory one, though. Hims & Hers Health recently experienced a sharp decline in its stock price. The culprit? Novo Nordisk, the pharmaceutical giant behind the weight loss drug Wegovy, abruptly ended their partnership a mere 2 months into what had been seen as a promising venture.
Yeah, that's a tough one. It's a cautionary tale for many, showing that even in a market brimming with innovation, partnerships can rapidly evolve and sometimes, unfortunately, dissolve, sending shockwaves through investors' portfolios. And speaking of challenges, inflation continues to make its presence felt as businesses face rising costs, partly due to persistent tariffs. Recent S&P surveys indicated that the cost of doing business for U.S. companies accelerated in June, this being the second fastest pace in roughly 2.5 years.
And those inflationary pressures are intimately tied to the higher tariffs implemented during the previous administration, a legacy that continues to weigh on profit margins and pricing strategies for companies across sectors. It really makes you wonder, are these tariffs a necessary evil to protect domestic industries, or are they inadvertently throttling competitiveness in the global market? It's a big question.
It really is. Shifting our attention to real estate, the housing market remains pretty subdued. Sales of existing homes inched slightly upward in May, yet the overall activity remains far below expectations. One of the big challenges we're observing is that potential buyers are increasingly cautious, hindered by the dual burden of sky-high interest rates and stubborn home prices.
and sellers unwilling to budge on pricing continue to contribute to a sluggish market dynamic. It's almost as if that delicate balance between buyer confidence and seller expectations is being tested in a crucible of economic pressures, leaving both parties in a state of cautious wait and see. Nobody wants to make the first move, it seems.
Exactly. Now let's dive a bit deeper into the sector analysis. On the technology front, innovation is absolutely the name of the game. With Tesla pushing the envelope in automated transportation and AMD paving the way for AI-powered chips, the industry is just thriving on innovation-driven momentum. What's particularly fascinating is how tech companies aren't just about consumer gadgets anymore.
They're redefining entire systems, from how we travel to how we interact with our digital environments. And the collaborative ventures between traditional oil stocks embracing technology and financial institutions venturing into the digital currency space, those are binary signals, indicating that the future truly belongs to those who can merge technological innovation with tried and tested business models. It's not one or the other anymore.
Right. Switching gears to the energy sector, we find that oil stocks continue to be a magnet for investors who appreciate quality amid uncertainty. When geopolitical tensions, particularly those originating from regions like Iran, come into play, the inherent volatility becomes a challenge. However, with that cautious selection process based on rigorous quality screens, focusing on cash flow and minimal debt burdens, investors can find opportunities that offer resilience over the long haul. It's almost poetic how, in the midst of uncertainty, disciplined screening of quality stocks provides a beacon for risk-averse investors.
It really does, and finance remains one of the most dynamic sectors. With the government adjusting monetary policies and the Federal Reserve delivering messages that sway investor sentiment, the bond market and equity markets have been so closely intertwined. The recent decline in U.S. 10-year Treasury yields highlights this nuance. It's a clear example of how policy turns, no matter how subtle, can ripple across the entire financial ecosystem. Consequently, we're witnessing a blend of optimism in individual corporate moves, like Uber's latest partnerships in fintech, with a sense of caution induced by macroeconomic shifts.
It's a complex dance. Taking a global view, it's crucial to consider how these market moves resonate around the world. Global market implications of these trends reflect that while the United States commands a significant portion of market attention, other regions are equally affected by tightening monetary policies, shifting energy dynamics, and evolving technology landscapes. For instance, as Amazon expands its Kuiper satellite constellation, markets globally are really opening their eyes to the potential of new internet connectivity solutions.
Absolutely. Opportunities that could redefine remote work, education, and communication across continents. Similarly, those subtle shifts in U.S. bond yields remind us that global trade and geopolitics are always intertwined, influencing investor confidence in markets from Tokyo to London. It's all connected.
It really is. Reflecting on these developments, one of the key expert insights we have is the notion that technology is truly the unifying thread that seems to be stitching together seemingly disparate market sectors. That comfortable interplay between automated driving, digital assets, and AI chips exemplifies a world where the boundaries between traditional sectors are blurring.
And economic wariness induced by geopolitical tensions and inflationary pressures is being offset, in part, by rapid technological advancements that promise to reshape industries in ways we barely imagined a decade ago. It's quite the balancing act.
It truly is. Now let's explore some expert predictions and insights for the day ahead. With inflation pressures easing in certain pockets and the Federal Reserve hinting at a more dovish stance, could this be the calm before another bullish phase in core equities? Could technology stocks, buoyed by innovation and steady demand for smarter solutions, outpace traditionally defensive sectors? These are the questions many experts are mulling over.
And those small yet significant gains observed in the Nasdaq and Russell 2000 might signal a gradual market recovery, particularly if global tensions subside and monetary policy remains accommodative. So a lot to watch there. On a lighter note, John, let me ask you this. If Tesla owners can now earn a little extra by turning their cars into robotaxis, do you think in the future your car might be the next financial advisor?
Oh, wow. Picture that. A vehicle telling you when to invest in tech stocks while cruising down the interstate. Break for a buy on AMD. It's a humorous, slightly far-fetched thought, but it really does underscore the rapid changes and unexpected innovations we're seeing across industries.
Right? It's not that far off sometimes. Before we wrap up, let's recap some of the key takeaways from today's discussion. The broad market remains cautious yet hopeful, with the S&P 500, Dow Jones, and Nasdaq showing only slight moves. Crypto assets like Bitcoin and Ethereum continue to experience minor dips, but remain in a steady holding pattern.
And Tesla's bold step into the Robotaxi realm is energizing investor sentiment, while Amazon's satellite initiative is really challenging the status quo in space-based internet services. The bond market is making a quiet statement with falling 10-year yields, likely hinting at shifts in broader economic landscapes. Oil stocks, quality selected and sensitive to geopolitical tensions, present both risk and promise, while key tech players like AMD and Fiserv are stepping up to deliver innovations that are capturing the attention of market watchers.
And let's not forget that ongoing dialogue about inflation and rising business costs, topics that remind us that while innovation drives growth, external economic pressures remain a constant challenge. In our detailed sector analysis, technology is leading with forward-thinking initiatives that don't just create buzz but have the potential to generate long-term value.
The energy sector is spotlighting resilience and careful screening amid geopolitical uncertainty. And finance remains a dance between policy shifts and market optimism. When we zoom out to a global perspective, it's clear that these sectors are interconnected. Technology is not only redefining industries in the United States, but also setting the tone for global market trends.
As we project ahead, it seems evident that despite some micro-level fluctuations and occasional bearish shadows, there's an underlying narrative of transformation that holds promise. Are we on the cusp of a new era where tech-driven disruption becomes the norm? Will traditional sectors find their footing by integrating cutting-edge solutions and harnessing the power of data and automation?
Those are truly thought-provoking questions, Sarah, like whether the merging of digital assets with proven finance models will enable more robust platforms for global trade, or if changing geopolitical landscapes will eventually stabilize and bring renewed investor confidence. I encourage you, our thoughtful audience, to consider these perspectives as you prepare your portfolios and investment strategies.
Yeah, how do you see these technological and geopolitical trends interplaying with your own investment outlook? Are you aligning your strategies more with disruptive tech innovations or seeking refuge in the conventional securities that have weathered past storms? And just for a bit of fun, if your car could offer investment advice, would you trust it over your longtime financial advisor?
That's the million-dollar question, isn't it? In closing, let's remember that every day in the markets presents a mosaic of opportunities and challenges. Today's briefing has offered a snapshot into the intricate dance of market dynamics, from bond yields to tech reinventions, from rising tariffs to global innovative trends. At PantheonAI, we remain committed to being your information co-pilot, helping you sift through complex data and narratives so that you're not only informed, but also equipped to make the best decisions possible.
Thank you for spending these moments with us. We hope today's deep dive into market trends, sector analyses, and expert insights has not only informed you, but also sparked some questions and ideas about how to navigate this fast-evolving landscape. Keep pondering those thought-provoking questions and be sure to tune in tomorrow for another exciting episode. And don't forget, if you ever have questions or need a second opinion, you can always ask our AI co-pilot.
Until next time, this is John.
And Sarah from PantheonAI saying, have a wonderful day and happy investing. PantheonAI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.